Hello and welcome to MarketTamer.com. We're looking at the S&P 500 on June 23rd, 2009. About almost a week ago, we noted how the price action was actually deviating for the first time below the 20-day moving average. And if we look back in the trend, we can see that in May, in April, and in March, that did not happen subsequent to the first big bounce here. So we kept trending upwards. We did have corrections below the 5-day moving average. Typically, that is a sign that there will be a more significant correction. In the case of this uptrend, we learned that once there was a correction on the 5-day, the 20-day kept holding as support. So that happened late in March. It happened again here in April. It happened again here in May. And so what we were looking out for was not so much a break of the 5-day, which did occur, which did obviously signal caution was warranted, but more a break below the 20-day to signal that for the first time in this uptrend since March, a more significant correction might be beginning. So that happened last week. We were aware of that. We flagged that to our members in videos, and obviously what we noted a couple of days afterwards was the likelihood of a quick reversal up to test the 20-day. Now that's exactly what happened. We had an up day, we had a flat day, we tested the 20-day, we never really showed a good close above it. We hit the moving average and we came right back down again. And so the action from Monday is very bearish. That shows us that that 20-day has convincingly failed at this point in time. Today's action did nothing to suggest that we should be anything but bearish. It's not to say we can't go up. Obviously, it's not like we have a crystal ball that can tell us definitely what will happen, but we can definitely play the probabilities. And once we see a correction that is significant, a break below a 20-day when that never happened, so a convincing break below a trend line, we see a very typical pattern of going up to test that trend line again before coming back down. That is all very classical technical bearish behavior, and for us at this point in time it means stay with the trend. So fortunately we found that we were right on the ball right as the trend change occurred, and so we can stay with bearish positions at this point in time. Until the trend actually changes, it's a good philosophy in general. Just stick with the trend. Don't try and fight it. Obviously, those of you that have already taken advantage of it, you can look to profit-taking opportunities. One of those profit-taking opportunities occurs once we start hitting 50-day lines. That's already occurred. Once you hit a Bollinger Band, you can also look to take some money off the table. But if you're looking to take advantage of a longer term trend, it's often good to keep part of the position in play, and that's classical positional trading. If we look to the next chart, what we find is the Dow Jones looks very similar in many respects. We have a break below the 20-day. We had some slight correction today, down 16 points, but really the significant move was made yesterday and obviously middle of last week. The NASDAQ is showing similar performance. It's also correcting. It hasn't quite breached the 50-day and started touching the Bollinger Band, but nevertheless it's still quite bearish. But let's move on, since they all look pretty similar. One of the questions that might be asked is the USO, for example. What happens when you have a position jumping up today all the way up to a 5-day or a 20-day moving average? How should you view it? Should you suddenly go bullish, given that there was a good 3% move to the upside? And the answer is no at this point in time. While the trend is bearish, you stay with the trend, even if there is an up day. You always remember, in down trends there are up days, and up trends there are down days. Neither signify a trend change until we get a change in the direction of the moving average. And finally, what's interesting about the move today is that if we look to the US dollar index, we have again a slight up day, and that's to be expected with the direction of the markets. That's all for now. We'll look forward to seeing you in classes. We wish you the best.